Well, with me now to take a closer look at China's CPI is Linda Yueh. Linda practiced international corporate law while living in China. She's now a fellow in economics at Oxford University and a visiting professor at London Business School. Linda, first of all, welcome. Thanks very much for joining us this morning. China's inflation figures are higher than expected. Why is that?
Well, I think what we're getting is a lot of the credit expansion, which has been used to fund the government stimulus that has delivered Chinese growth throughout the global recession, coupled with, unfortunately, really strong underlying imported price pressures. So that means cheap currency might be good for exports, but it's no good if you import your oil and your food and all those other things.
Sure. Now, is this actually a problem? Is the economy actually overheating?
Well, if you look at the figure itself, 2.7% actually doesn't look that high. It's within the kind of 3% goal they're setting. But the problem is this. Money growth, so this is M2 monetary aggregate, which almost always in China tells you where inflation is headed, is an astounding 25%. Wow. And that's why people are worried. So they're saying CPI might be low, but look at house prices, look at the stock market. The inflation, it's there, and it's going to come out, probably in the next few months, which means China may well be overheating. We just don't see it in this particular figure.
Right. So is it going to be time then to rein in the fiscal stimulus?
Oh, well, see, this is really tricky for China. They're really worried about growth this year because so much of the growth had depended on exports. They're not counting on that. So instead, they're going to use government spending. If they use government spending, it's being financed through credit from the state-owned banks. So they want to prevent the economy from overheating, but they also want to use the banks to finance government spending. Until they resolve that, they're going to have a serious problem. And a lot of people will point to the house price figures that's just come out over 10% growth and say they're not doing a good enough job at preventing the overheating. They're still too fixated on growth.
Now, banks financing government spending in China has actually been very successful. Has there been any downside to it?
It has been remarkably successful just on something like job creation.
Yes.
20 million migrants lost their jobs with the economic downturn because they worked in export factories. They've all found work again in rural areas. So China now has labor shortages on the coast. But the biggest downside is this. Chinese local governments are not allowed to issue bonds. They cannot borrow in order to finance their spending. So they have to go through the state-owned banking system. So this is the biggest problem, is that if you need $300 billion to stimulus like China does this year, when you tell the banking system to do it, they can issue $1 trillion worth of credit, which is what happened.
Well, when we look at the markets and we see how quickly they're rising, is there a danger there that China's created asset bubbles?
Very much so. I think you really find that capital controls, so this is capital unable to move out of China, is finding itself into housing and into the stock market, and it's compounded by the fact that in the middle of 2008, the Chinese currency was repegged to the US dollar. That means they're now importing the zero interest rate policy of the United States, which of course induces liquidity when US interest rates are zero and Chinese interest rates are 5%. So that is why I think there are really serious problems of liquidity in China building up, and why lots of people are looking at this and saying, you think it's going to deliver growth, but it could just give you an asset bubble that's going to burst.
Indeed. Now, let's talk a little bit about the yuan and about that peg. There have been some slight comments here and there that this maybe is not going to last forever and we might be seeing the end of it sometime soon, and those words are all we're not very clear about what's happening. Do you have any insight into what you think will happen with yuan?
Really interesting comments from Zhou Xiaoquan, the head of the Chinese Central Bank, the PBOC, over the weekend after the Chinese National People's Congress, their annual meeting of policymakers. He said, oh, the dollar peg was really a one-off. It was just to cope with the crisis. That is a very strong signal. They're probably going to repeg to a trade-weighted basket of currencies that will stop some of this liquidity inflow, because this means the Chinese renminbi is not so pegged to the dollar. And the main reason they're going to do this is not because of Western complaints, it's because of this liquidity problem.
Right. And do we have any idea when this might happen?
Oh,
the big question, right?
That's the big question. I think inflation is creeping up actually pretty quickly. If you look on the month-on-month change here, this implies in probably as soon as the next couple of months, we may well see a stealth announcement that says the renminbi is back to its 2005 peg. But we'll have to wait and see.
Lovely. Linda, thanks so much indeed.